Welcome to the Oversold Capital community, where we discuss the stock market and trading strategies to become a consistently profitable trader and investor. Hey traders, welcome back to Oversold Capital. On today's video, we're going to go through the weekly watch list and we're also going to take a look at the market update. Today, we're going to take a look at the Nasdaq Composite because I think it's really important to understand what is happening in that market, since most of the names that we tend to trade in the Nasdaq exchange. So I think it's really important to understand what is the short-term structure for the Nasdaq Composite as of now. Also guys, remember that this video is for informational purposes only. It's just based on my personal opinion and it's not financial advice. And also guys, remember to subscribe to the channel. That way you can keep updated with all the upcoming videos that we put out here in the channel. So let's start here with the Nasdaq Composite. Let me make myself a little bit smaller here. And the Nasdaq Composite, for anyone who doesn't know, the ticker symbol for the Nasdaq Composite in TradingView is IXIC. And you can see right here that we have the Nasdaq Composite. Now, I think it's really important to address what is happening right here in the short term. So before we go into that, let me just zoom out here a little bit and see what was the price action before this week's price action. And you can see that the price action that we had basically since the beginning of April, all of the price action that we have seen in the Nasdaq Composite has been basically above that 21 EMA wave and also has been above that 50 daily moving average. So let's just keep things really simple. Let's forget about the term bull market, let's forget about the term bear market, and let's just focus on what price is actually doing. And what price is doing, price is changing its short-term trend. We're not going to talk about what is going to happen in 20 years, what is going to happen in 2 years, what is going to happen in 6 months. We're going to talk about what is probably and most likely to happen next week. If you took a look at the video that I put last week, I was actually looking for a bounce. But my mistake in looking for a bounce was that I was totally disregarding the fact that the Nasdaq Composite was already breaking below the 21 EMA wave. And since I didn't took into consideration that really small but rather important fact, I wasn't able to trade this move to the downside properly. And I basically missed this move to the downside that was actually it was actually a very profitable move because it was a really easy move to catch. But I was so into thinking that we were on a bull market, and I'm not saying that we're not, but I was so into thinking that we were on a bull market that I was looking for more proof or evidence that the market was going to bounce. So I think it's really important for us to forget the term bull market, to forget the term bear market, and just focus on what the price action is doing. So right now, price action is breaking to the downside. Looking for bounces here in the market is basically trading basically trading against the direction of the trend, because right now the path of least resistance is to the downside. So what is going to be the expectation for next week here? The expectation for next week, you can see right here that we're pretty extended. We're pretty extended to the downside. We are hitting the 3 ATR level and we're starting to see a little bit of buyers showing up. You can see that from the candle that we had on Friday. Now, even if we bounce here, that's gonna be a counter trend move that is most probably gonna come into resistance at these levels right here. So it's really important to understand that the easy trade right now is gonna be wait for a bounce into resistance somewhere around this level of 13,600, and then looking to short that move perhaps into further continuation to the downside. We don't know if we're gonna get further continuation to the downside, but we do know that the path of least resistance is to the downside. And that's very important to understand, because I have found in my experience that traders, and including my old self, I used to lose a lot of money when I fought the price, when I fought against the price action that was in front of the charts. trying to time a pullback, and not necessarily a pullback, trying to time a bottom or trying to time a high or anything like that. The easiest way to trade is in the direction of the 21 EMA wave. Same as we had right here. The 21 price was above the 21 EMA wave, and the easiest way to trade is in the direction of the 21 EMA wave. That's why I created this indicator. And right now that we're below the 21 EMA wave, the easiest way to trade is in the direction of the 21 EMA wave. If the market changes direction, and for the market to change direction, we will need the 21 EMA wave to come down here, and then we will need for the market to test it, get rejected, and then come above, then the thesis will change. But for now, the path of least resistance is to the downside. So looking for bullish setups right now, I don't think it makes sense. I think what makes sense is to understand that the path of least resistance is to the downside. And let me show you some other things that I also take a look at when trying to understand what is the current sentiment in the Nasdaq Composite. So let me show you this chart right here. This is basically the same price action of the Nasdaq Composite because it's the Nasdaq Composite, but this is the summation index of only the Nasdaq Composite. So I'm not taking into consideration the NYSE. I'm only looking at the Nasdaq Composite, and you can see right here that the summation index is also crossing to the downside. So we also have negative momentum in the summation index for the Nasdaq Composite. And if we take a look at this indicator, which is an indicator that a lot of people are familiar with, which is basically just the net highs and the net lows, I only have here the net highs and the net lows for the Nasdaq Composite. I don't take a look at any of the other indexes because most of the stocks that I trade, they just trade on the Nasdaq Composite. They trade in this exchange. So you can see right here that we also have negative highs, meaning that the new 52-week lows are outpacing the 52 new week highs, which basically just means that it's easier to trade to the downside at this moment in time. We didn't have that in the month of June and July, where the 52-week highs were outpacing the 52 new lows. So I think it's really important to understand that, and to understand that the path of least resistance in the Nasdaq Composite is to the downside. So right now, momentum, if we just take a look also, momentum is breaking below that 50 line, something that we haven't done since April. So that's something new. And you can also see that the momentum in the backup trend indicator, which is basically just the histogram of a MACD, is also very, very, very negative. So any bounces here, for us to correct this, we will need a lot of buying pressure. So right now, the easiest thing to do is wait for a bounce and then short it. I don't know if we're going to trade to new lows, but that's going to be the easiest trade for next week. And now let's jump into some of the names that I'm looking for next week. And these are, I'm going to keep it pretty simple, guys. I'm just looking at the SQQQ. I'm looking at the SQQQ, and if you want to take a screenshot here, I'm just looking at the SQQQ. I'm looking at the FNGD, which is the inverse ETF for the FANG, and then I'm looking at the TECS, which is basically the bear ETF, the 3X bear ETF for the XLK, which is the technology sector. So just keeping things really simple. If we take a look at here at the SQQQ, which basically looks very similar to the other names that I'm going to show you, this is looking pretty bullish, right? Momentum is really positive in both of my indicators. We are starting to cross above that 50 line in the momentum as well, which is actually pretty important. And then you can see that we're trading above that 21 EMA wave. Why fight this? I don't see any reason to fight this price action. So my expectation is that if we happen to pull to this level of support, I'm gonna buy some SQQQ. Are we gonna make new highs? I have no idea. But the easiest trade here is just join the sellers if we happen to see a snapback rally in the indexes. I think that's gonna be the easy trade. I'm just gonna keep it pretty simple. If we take a look at the TECS, which is the 3X ETF for the technology sector, we can see the same thing. We're trading above the 21 EMA wave, something that we haven't done since August. And right now the trend changed. So any pullback into that level of support, I think is going to be a buying opportunity. And then looking at the FNGD, which is the short, which is the 3x short ETF for the FANGs, basically the same thing. We broke above this level of resistance, and any pullback to that level is going to be an opportunity to get some short exposure. And if we take a look at the FANGs, right, we can take a look at Apple. Apple is trading to the downside. Like, trying to buy Apple here doesn't make much sense. Would you do it? Like, if we just inverse the chart, right, will you short Apple here? And the answer is no. You will wait for a pullback and then buy Apple. So that's exactly what we're seeing right now. So I think it's really important to understand that. And even if we take a look at the VIX, let's just take quickly a quick look to the VIX. And let me just take out the inverse ETF. You can see right now, and we can make the argument that the VIX is hitting resistance right here at the 200 daily moving average, but still, the VIX is trading above the 21 EMA wave, above some short-term level of structure. So any pullback in the VIX is also probably going to be an opportunity to take the indexes to a short level. Unless the VIX start to break below 16 and then perhaps 15 and we lose that 21 EMA wave like we did right here, then perhaps we will see a change in the short-term price action of the indexes. But for now, I don't think we need to fight any of this price action, and we just need to understand that any snapback rally is going to be an opportunity to short. And if you want to take a look at some bullish setups, I think, let me see right now, let me just take a look at my screener. I have a couple of names, but I have Team, right? Team is looking interesting right here because we're pulling back to the 21 EMA wave. You can see that we haven't break that level, but the way I see it, and if you like using Anchor VWAP, what I'm seeing here is that shorts are making money. Whoever shorted this move continues to make money. So any rally to that level, considering that the Nasdaq Composite is in a downtrend, is probably gonna be met with resistance. So just take that into consideration. I don't think it's gonna be pretty useful to watch so many bullish charts when the Nasdaq Composite is looking like this. So I think that you just keep it pretty simple. In summary, guys, the short-term price action is pointing that the path of least resistance continues to be to the downside. I don't think you need to fight it. Wait for a snapback rally, short the snapback rally. We don't know if it's gonna work, but it's gonna be an easy way to keep your risk pretty low. If we happen to trade above the 21 EMA wave, then the thesis is going to change, and then we're probably going to start to look for bullish setups. But right now, the path of this resistance is to the downside, and we don't have to fight it at all. So thank you so much, guys, for watching the video. Remember to subscribe, and I will see you on future videos. Take care, and bye-bye.